Ladies and gentlemen, hello, this is Christopher Aaron. I want to thank you for joining me. It is the 13th of July, 2016. We are going to look at the prices of gold and silver, which are now getting increasing attention in the mainstream media, although this is a trend that is just beginning, I believe, and we will put this into the proper perspective. There are some very interesting long-term trend lines that are being tested right now in gold, and I do have the expectation of a possibility for a retracement in silver at some point over the next month or two, so I want to let you know about that. I've had a few people sending me some emails and some questions about the launch of the high leverage, high reward, high risk trading service that I was talking about around a month ago, and this is getting closer to a launch. My apologies for taking some time to get this ready. These are the types of trades that I do not perform that often. If you'll notice, if you go back to those videos from the early part of June, I made 160% on an options trade in the silver market in 5 days. So if you're able to do that, and some people made even more than me because they got a nice entry point on those options, if you're able to do that anywhere from 3 to 6 times per year, my goodness, you don't really need to do a whole lot more of trading other than that. So that's the type of style of trading that I do. I don't like to trade very often. I don't like to trade in and out during the day and make all these quick kinds of things because it's too much stress and there's not enough reward for that. So anyway, my point is this will be getting going soon. I'm nearing the completion of the software system that I need for that. I have received your emails if you have sent me emails about that, and I will be getting in touch with you within the next week as we launch that. And again, that will be something that we do infrequent, high potential setups for, exactly as shown in those videos. Moving along to the physical markets for gold and silver, which I do recommend for anyone who is new. I recommend that you not look into trading as I do from time to time. I recommend that you start accumulating these metals because we are just, in the grand scheme of things, rounding out of these long-term bottoms for the metals. So while we do look at the short-term price action every week, here seeing gold coming down from the recent highs above 1370, falling below 1330, and a nice little rebound today into the middle range of this recent consolidation. While we do see that for gold, and we see silver following kind of a similar pattern, basically in the middle of the ranges that we've been seeing, it is always important to segregate in your minds between the long-term potential, and this is why personally and when I'm advising clients, I always recommend that you hold a significant long-term position that you do not trade in and out of, because it really takes a lot of the emotion out of this. It allows you to really capture the big moves that are unfolding while not having to monitor minute by minute, hour by hour what's happening. So when we have a nice setup in the short run, those can happen on the sides. You can make some profits on the sides sometimes, but you don't want to risk your entire portfolio just trying to do some of those high reward setups. So that is my recommendation. Now, looking at the gold chart, we spoke last week about the bull flag potential that is setting up in the gold market on that generational time scale. If you don't know what I'm talking about, just go back and watch the middle portion of last week's video. We're zooming in now to the gold market from 2009 to present, and we're looking at a linear time scale on the y-axis as opposed to the log time scale that we were looking at. And it's beneficial to look at both perspectives, the linear and the logarithmic scale. It just gives us a different perspective. There's no right or wrong way to do this form of analysis. It's just good to look at both when we're looking at the long term. So here's the critical situation that gold is in right now. And if you're new to this style of analysis, different people do it in different ways. I like to color coordinate everything in the way that you see here so that it draws your eyes to the important points on the charts. And I always keep these colors the same if you are new so that you can get familiar with this system. So the primary downtrend that was broken here in gold dating back from 2013, this final up, down, up, down, up, down, up, down, was shown here. We used to show this in the royal blue for the primary trend. And now this has been changed to the turquoise color to indicate broken trend lines. And that's because I find it still important to pay attention to the broken trend lines, because as you can see, for example, here in the beginning part of June, there was a retest of this broken trend lines, and we often get these retests in the future. So it's important to pay attention to these lines, but not to focus on them as our primary concern. So now, in the gold market, what is our primary concern? It is the long-term downtrend line that is just being tested right now. This is the long-term downtrend line dating back from 2011, from the all-time high in the gold market above 1900 per ounce. So it's very simple here. The way we're drawing this line is just to connect the most significant peaks. And if we have something like this where there's 1, 2, 3 in a row, we would first have a trend line connecting the first peak. But as we can see, if we draw an imaginary line right there, that trend line was broken already. So we extended out to the second, and now we're at the final of these third peaks, right at the $1,800 level. So we draw from the high to this peak, and lo and behold, this is where gold is hitting right now, 4 years later after this second trend line hit. We're having a third trend line hit here in the magenta color. So, as crazy as it sounds, I am not the only one out there who pays attention to these trend lines. There are thousands and thousands of technical-based traders who are moving hundreds of thousands and millions of dollars worth of gold contracts in the futures market who are looking at this exact trend line here right now. And a lot of them who are still in the bearish camp, who are still saying, well, this line hasn't been broken, so therefore gold is still in a downtrend for the long term. And technically speaking, they would be correct. Now, we have a lot of other indicators that are telling us that the long-term trend is in the process of changing, and that's the important thing. If you can recognize the changes in the trends in the short and the intermediate term, you can set yourself up really well for when these long-term downtrends finally break. But to get back to that, there are these people selling right now. So we're looking at the support lines here that are, the resistance lines that are being hit. And when we zoom in on this, we're going to now zoom in on this last year and a half of action. And we can see the gold market having broken out of the initial resistance zone that had held it around 1305, breaking out. And now notice this weakness that we have here coming right in where that long-term trend line would be if we were to draw this on the short-term chart. So it's not random that the gold market has been fading here in the last week from this high. This is entirely based on technical-based selling. So what are we looking at now for gold? Again, this resistance zone should now act as support between this region of 1285 and 1305. this should be acting as support on any further weakness that we see. And mind you, this downtrend here, the long-term downtrend, is still sloping downward. And so every month or so that this goes on, this line comes lower and lower and lower. So if the gold price were to merely consolidate for the rest of the summer, you would be looking at another attempt on this downtrend at some point coming up here in the later part of the summer, even lower than the last attempt. And these breakouts from these lines, they tend to not be small little breakouts. We can see that from here. This breakout was a surge on 2 times average volume. You can see that right here. I expect when this long-term downtrend is broken and the final bears, at least from the technical standpoint, when they throw in the towel and become bulls, I expect that this will happen in no uncertain terms, and we will see quite a surge, perhaps something like this, which was a $110 intraday surge. We might see something like that. Of course, minding the fact that this may not happen right away. According to the analysis that I'm looking at, for example, if gold is going to stay in this blue primary uptrend right now, this breakout could even wait until October. So these things do sometimes take time to play out. And I like to present things as clearly as I possibly can see them. Looking at the silver market now, it's a different setup. For silver, we're backed out here into the 3-year time frame, and I know this type of analysis was looking questionable some months ago, but we're seeing the confirmation of these patterns coming into play here. I mean, this is just a series of beautiful cup patterns that is forming here. These swoops lower and moves higher, and of course I've drawn the trend lines in here to try to draw your eyes to the important points of these patterns. But these cupping patterns here that are forming, these embedded cupping patterns, are basically what we would call in technical analysis inverse head and shoulders patterns. And we saw that below the 1625 level. We were watching that for over a year. The next level, the level 2 inverse head and shoulders, was below the 1875 region. That has now broken to the upside. The level 1 target was hit. The level 2 target for this pattern comes between $21.50 and $23. So the price of silver already spiked up to around $21.25 before backing off some. The important point here is that this market, the silver market, is acting very well on a technical basis, although I do have to admit it is moving faster than even I anticipated. So whereas here we had, and this is something that I mentioned a few months ago, here we had basically 2 swoops down below the $18 level on the way down. On the way up, we only had 1 move down here, and you can see that right there before breaking higher. So what I'm expecting for silver is that when this target gets hit at some point in the next couple of months, I'm expecting a violent reaction downward. So the price could have already made that peak here, slightly below the target level, or it could be gearing up for a move to 21.50, 22, 23. And I think you will see a violent move back down in silver, perhaps down to 19.50, perhaps down to 18, perhaps using another form of the analysis that we do, the trend line analysis. If we draw a very simple trend line from the lows all the way up here, price of silver could come back all the way into the mid-17s. So I think it's important psychologically when you're looking at these markets, the moments that you feel, the moments that we all feel most bullish, most like this is taking off, it's now or never, it's important to remember that those are typically the times when everyone else is thinking that way, meaning everyone else has bought for the short run, and when everyone else has bought in the short run, all that remain are sellers. And the price then tends to have a violent retracement. So I'm not saying that's coming right now, this week or next week. We're looking at kind of the intermediate term time frame here for silver. This is why I like to trade the silver market in the short run, because if we can capture one of these moves lower and perhaps higher one or two more times throughout the remainder of this year and make 50 or 100 or 150% on some of these trades, it's nice to do that in the short run, even while we hold that core position in the Bullion. So these strategies are not mutually exclusive. I think there's no need to sort of divide ourselves into these camps. Some people who accumulate physical metal for some reason have almost a hatred toward people who trade, and I just don't understand it. It's just, it's price discovery, it's skill, it's research, and it's a way to make money. And then what you do with that money is entirely up to you. So I see no problem with making money in the short run and then using those profits to buy more physical metal, for example. It's the kind of thing that I like to do, and I do see another potential for a significant swing here coming in silver, lower at some point and then moving higher. And when we break this 25 region, which looks like it could happen in the next 6 to 12 months, we will be setting up for a move significantly higher in silver and in the mining complex. The summary here, we've covered it. Support zone in gold, 1285 to 1306. Resistance is at that long-term magenta colored downtrend. Silver, support is 17 to 18. And the resistance right now, we are looking at 2150 to 23, the horizontal resistance level. So quite a wild range that we could see here in silver over the next few months. Prepare for this volatility. Thank you very much for watching. I really hope to try to appeal to the diverse range of people that are becoming interested in this market. There is a ton of opportunity for every type of strategy in this market. It's going to be very exciting and very volatile as we go forward. So I'm glad to be here together, and the next video will be this time next week. I try to make these videos once a week on Wednesday evening. Thank you again, and have a lovely night.